Ever wonder how billionaires like Elon Musk and Jeff Bezos manage to cut their income taxes by at least half while enjoying vacations in places like these? As we pan over breathtaking Hawaiian beaches, lush exotic greenery, and turquoise waters, it's hard not to wonder, how do they do it? How do the likes of Elon Musk, Jeff Bezos, Mark Zuckerberg, Oprah Winfrey, Taylor Swift, Tyler Perry, Jay-Z, and Donald Trump manage to keep so much of their wealth intact, while the rest of us watch our paychecks get sliced and diced by taxes in contrast to these paradisiacal retreats? The answer, my friends, lies in their tax strategies. Let's start with Elon Musk, the tech genius behind Tesla and SpaceX. Musk has mastered the art of using stock options to his advantage, managing to keep his actual income low while his wealth skyrockets. Then we have Jeff Bezos, the mastermind behind Amazon. Bezos is known for reinvesting his profits back into the business, a move that effectively reduces taxable income. Mark Zuckerberg, the face of Facebook, has been known to donate massive amounts of his wealth to his own charitable foundation. This philanthropic move doesn't just earn him goodwill, it also earns him significant tax deductions. Oprah Winfrey, the queen of media, is a savvy investor. She wisely puts her money into tax-advantaged investments, thus reducing her taxable income. Pop sensation Taylor Swift, Hollywood mogul Tyler Perry, hip-hop icon Jay-Z, and business tycoon Donald Trump all have their own tax strategies too. From setting up trusts and foundations to leveraging real estate and other investments, these billionaires know how to work the system to their advantage. But here's the thing. You don't have to be a billionaire to use these strategies. With a little bit of knowledge and planning, you too can keep more of your hard-earned money where it belongs, in your stick around, and we'll dive into the top 5 strategies these billionaires use to keep their money where it belongs, in their pockets. The first strategy is all about deductions. Billionaires know how to use them to their advantage. Do you? Welcome to the world of deductions, a key factor in the tax strategies of the wealthy. It's not about evading taxes, it's about understanding the system and utilizing it effectively. Let's take Elon Musk, for instance. Paying taxes isn't his favorite pastime, but he's mastered the art of legally reducing his tax liability through deductions. Musk, you see, understands that the tax code is not just a tool for collecting revenue, but also a means to incentivize certain behaviors. For instance, deductions for research and development encourage businesses to innovate. Musk's companies like SpaceX and Tesla heavily invest in R&D, and this is reflected in their tax deductions. Additionally, the depreciation of assets is another common deduction. For businesses with substantial physical assets like Tesla's factories, this can be a significant factor in reducing taxable income. Charitable contributions are another area where Musk, like many billionaires, finds tax advantages. By donating to charitable causes, not only does he contribute to society, but he also receives a deduction that reduces his taxable income. And let's not forget about the deductions available through the cost of doing business. From salaries and benefits to office supplies and travel expenses, these necessary costs can all be deducted. So by using deductions wisely, you too can significantly reduce your taxable income. Now let's talk about tax-free bonds, a favorite among the rich and famous. Ever wonder how a billionaire like Jeff Bezos manages to keep his tax bill in check? One of his strategies involves investing in tax-free bonds. Now you might be wondering, what exactly are tax-free bonds? Well, they're pretty much what they sound like. They're bonds issued by entities like municipalities or government bodies. And the interest you earn from these bonds is not subject to federal income tax. In some cases, they may also be exempt from state and local taxes, depending on where you live. Consider them as a double-edged sword of investing. Not only do you get a steady stream of income from the interest, but you also keep the taxman at bay. It's a win-win situation. Bezos, with his massive wealth, can afford to invest a large chunk of his money in these bonds, earning him millions in tax-free income every year. But here's the kicker. You don't have to be a billionaire to invest in tax-free bonds. They're available to all investors and can be a great way to diversify your portfolio while also reducing your tax burden. Just remember, while tax-free bonds can be a good investment, they're not for everyone. Always do your due diligence before investing, and consider consulting with a financial advisor to see if they're right for you. Investing in tax-free bonds can be a great way to keep your money safe from the taxman. Capital gains. It's a term you've probably heard before, but do you know how it can help you cut your taxes? Let's dive right in. Capital gains refer to the increase in value of an investment or real estate over time. It's the difference between what you paid for the asset and what you get when you sell it. Now, you might wonder how this can help reduce your tax. Well, here's the trick. The tax rate on long-term capital gains is usually lower than the tax on regular income. This means that if you earn money from selling an asset you've held for more than a year, you'll pay less tax on that income. Let's take Mark Zuckerberg as an example. He's not just making money from his salary at Facebook. A lot of his income comes from selling his shares in the company. Because he's held those shares for more than a year, the money he makes from selling them is taxed at the capital gains rate, which is lower than the regular income tax rate. This way, he keeps more of his earnings. Just like Zuckerberg, you too can benefit from this strategy. Whether it's stocks, bonds, or real estate, holding onto your investments for more than a year before selling can help you reduce your tax bill. By strategically managing your capital gains, you can keep more of your hard-earned money. Our fourth strategy takes us offshore. Ever wonder why so many billionaires have accounts in far-off places? Well, it's not just for the tropical climate or the stunning vistas, but rather for the tax benefits that these offshore havens offer. Offshore accounts, essentially, are bank accounts located outside the account holder's country of residence. Now, you might be thinking, isn't that illegal? Contrary to popular belief, having an offshore account is perfectly legal. It's what you do with it that can potentially cross the line. These distant accounts can be instrumental in reducing income tax. How? They allow money to grow tax-free. This is especially beneficial for individuals in higher tax brackets, like our billionaire friends. For instance, let's take a look at Jay-Z, the hip-hop mogul turned business tycoon. Jay-Z, with his vast empire, has been known to utilize offshore accounts as part of his tax strategy. By placing some of his wealth in these accounts, he can allow his money to grow without being subject to hefty taxes. This strategy, when used correctly and legally, can result in significant savings. However, it's important to note that moving money offshore doesn't mean you can ignore your tax obligations. The IRS still requires you to report any income you've earned worldwide. The key here is to use these accounts to defer taxes on your investment income, not to evade them entirely. Moreover, the process of setting up an offshore account can be complex, and the regulations surrounding them can be stringent. It's crucial to seek professional advice before embarking on this path. So while offshore accounts may seem like the domain of the super rich and ultra famous, they are, in fact, accessible to many. With the right planning and advice, you too can take advantage of this strategy, just like Jay-Z. Offshore accounts may seem complicated, but they can be a powerful tool in your tax-cutting arsenal. It's all about understanding the nuances and playing the game smartly. After all, it's not just about making money, it's about keeping it too. Last but not least, let's talk about trust funds. Not just for the kids anymore, right? Trust funds, often associated with the silver spoon set, are actually a powerful tool for tax reduction. So what exactly is a trust fund? In simple terms, it's a legal entity that holds and manages assets on behalf of another person or group. But how does this help in cutting down income tax? Well, imagine you have a large amount of wealth. Instead of keeping it all under your name, you can place a chunk of it into a trust fund. The income generated by the assets in the trust fund is taxed separately from your personal income, often at a much lower rate. Now let's take a look at our case study, Taylor Swift. Known for her catchy tunes and philanthropy, Swift has also made some smart financial moves. A part of Swift's substantial fortune is held in trust funds. This not only protects her wealth, but also significantly reduces her income tax. Setting up a trust fund is not as complicated as it sounds. You need a lawyer, a trustee to manage the fund, and a clear understanding of your financial goals. But remember, it's not a one-size-fits-all solution. It's a strategy that needs to be tailored to your specific circumstances. Trust funds can be a great way to secure your wealth and cut down on taxes at the same time. So why not consider exploring this option? It might just be the tax hack you've been looking for. So, there you have it. 5 strategies that billionaires use to cut their income taxes by at least half. We've explored using deductions, investing in tax-free bonds, capitalizing on capital gains, utilizing offshore accounts, and setting up trust funds. Imagine the impact these could have on your financial health. Want to learn more about reducing your taxes? Click the link in the description to order a comprehensive outline of dozens more tax-cutting techniques. Remember, knowledge is power, especially when it comes to your money.